Good morning, good morning. Welcome to today's morning blast with myself.
Most people, that's the problem.
Hello, you talking to me?
Oh, hello, morning. Sorry, I didn't realise my microphone was on then. Good
Oh,
morning,
hello.
everyone.
Oh, what a start.
It's all right. I was
Beautiful.
I was just taking a mick at people for being on holiday, and for once it wasn't
Oh,
Zach.
Oh, there you go. Well, before I was rudely interrupted, let me finish what I was saying. Join Michael and myself to jumpstart your trading day and week as it's Monday for our exclusive daily market preview. But before we get underway and before Michael accidentally says something incriminating where he thinks he's muted, let's get the legals out the way. Nothing discussed on this space in this session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, Trades PIQ or PIQ Suite, or indeed the hosts, which, as you know by now, is myself, Mr. Ryan Paisley, and of course, Mr. Michael Brown. Good morning and happy Monday to you, Mr. Michael Brown.
Indeed, very good morning. Happy Monday to everyone. It will actually please you, Ryan. I was trying to explain to an Aussie who Judith Chalmers was.
Oh, God, brilliant. Yeah, I do appreciate that. And speaking of the devil, I've just noticed that Zach's
Here he
joined
is.
me.
Good morning, Zach.
What's been occurring, my good friend?
What has been occurring? Good morning, everyone. It was I guess a sort of quiet-ish end to the week for financial markets on Friday. The S&P ended the day about 1/10 of 1% higher. The Nasdaq up by about 0.4%. Both of those pairing intraday losses as the day progressed, and actually that advance allowing the S&P 500 to snap what had been a 4-week losing run. Outside of the equity space, it was also a relatively choppy day. Treasuries pretty much ending the day broadly where we begun, with the 2-year about 3.95%. And the 10-year about 4.25%, although we have seen some selling pressure begin to creep in across the curve throughout Asia trade overnight. And in the foreign exchange space, the dollar trading broadly firmer against most peers, with the dollar index closing north of the 104 mark for the first time in a couple of weeks. Cable briefly trading below 129 on Friday, and the euro sadly, very, very sadly indeed, testing the 108 figure to the downside, although we have mercifully bounced off that level during the Asia session. In terms of catalysts on Friday, for the most part, they were relatively thin on the ground, although, of course, as soon as I sat down for a beer on Friday afternoon, President Trump decided to start waffling away. Risk assets getting a little bit of a boost late on Friday after President Trump touted the possibility of flexibility when it comes to the idea of reciprocal tariffs, and that caused a little bit of equity buying into the weekend. I think it's important just to put a little bit of context around what Trump was saying. Excuse me. At first glance, it would seem that the flexibility that Trump was touting was the idea that because tariffs are reciprocal, they would not be the same for every nation. For example, it's not going to be 10% across the board. It's going to be you're charging us 5, so we charge you 5. You're charging us 25, so we're going to charge you 25%. So I think there was a little bit of kind of classic case of the market really hoping for a bit of good news, coupled with a little bit of dodgy headline writing, and all of a sudden in a relatively thin market you get a bit of juice for risk assets into the weekend. Following up on that, we have had reporting over the weekend via the Wall Street Journal, who noted in a sources piece that the tariffs may be, and I quote here, more measured than previously thought, that some countries may be exempt if they run a trade surplus, and that some sectoral specific levies, which are also due on the 2nd of April, may be postponed. And this is things like autos and chips that have previously been touted for being delivered on what is now being billed as Liberation Day. Forgive me, that's not my coining there. The one thing I would say, though, is, of course, as we move closer to the 2nd of April, which is, of course, next Wednesday, I think noise on the tariff front is going to ramp up significantly. I think that this is certainly not going to be the last of these sort of sources stories that we hear going into the start of next month. And also what I would very much caution is that, firstly, there's a lot more noise than signal in a lot of these reporting. And secondly, of course, it only takes, well, the stroke of a pen, really, effectively, with Trump putting out a Truth Social post to rubbish the reports, and also for the market to then give up and retrace whatever move it has made. So very, very much a case of caution being needed, and some of these headlines being needed to be taken with a little bit of a pinch of salt as we move towards the start of April. In terms, go on.
Just before we push in, just because it saves us coming back when I do my overnight news roundup. So one thing that was actually specified or mentioned over the weekend, and something that Zach picked up on, hello Zach from the Slopes, was that not only will they be more measured, but potentially the tariffs, but also narrower than officially feared, with perhaps focusing on countries with a trade surpluses to the US. So that's another one to try and work out who and when and where and maybe is going to be affected by that.
Well, and the other thing with that, and I'm going to use the UK as a bit of an example here, it depends on the calculations that you use for trade, because the US believe that we have a trade deficit with them, and we believe that they have a trade deficit with us. And I mean, that clearly is not possible. No. So yeah, it very much depends on how you're actually working that out.
No, absolutely. That's what I mean. It's going to be even giving us as much information as they think that we need is still not enough, because it's so convoluted.
Yes, absolutely. So yeah, plenty of noise on that front is likely as we move through the next week or so. Just sticking with trade very briefly, Bloomberg sources reported late on Friday that France have apparently been speaking to the European Commission about using the EU's most powerful trade tool on the United States. Now, I thought that this was a summit in Brussels, but apparently it's not. It's something called the anti-coercion instrument, which would allow the European Union to deploy retaliatory responses, including restrictions on trade and services, intellectual property rights, foreign direct investment, and access to public procurement. Basically, it's the French writing a strongly worded letter saying they're not very happy with what the United States are doing. But it is one to watch nonetheless, just in case that gathers a little bit of traction this week. In terms of other bits and bobs from Friday, as I said, catalyst lacking somewhat. We did have retail sales figures out of Canada. Sales fell by 0.6% on a month-on-month basis in January, worse than the 0.4% decline that had been expected. And StatCan, their flash estimate for February is for another 0.4% decline last month. Of course, February is when we will start to see the impact of tariffs begin to show up in that data. And just sticking with Canada, actually, their Prime Minister, still feels weird to call him that, Mark Carney, he has called an election in Canada for the 28th of April. That was kind of rumoured towards the middle of last week, and it was confirmed by the unreliable boyfriend himself in a press conference yesterday afternoon. Sticking with politics, the German defence and infra spending bill that passed the upper house of the German parliament, which I'm not going to pronounce, on Friday. That means that all parliamentary hurdles on that front have now been completed. I believe that the Bundestag, which is the lower house in Germany, has now actually dissolved because, of course, well, they're effectively no longer in their jobs. They had an election recently, so focus in Germany now turns to the ongoing coalition talks between the CDU, CSU and SPD in order to install Friedrich Merz as Chancellor. Of course, he previously said that he wanted that to be done by Easter. Couple of other bits and bobs. A headline that kind of attracted quite a lot of attention over the weekend, at least the media seem to have been writing it up a lot, is that the CFTC report, which for those who are unaware is the Commitment of Traders report, which references futures positioning on the CME, which is, I believe it's positioning as of the Tuesday and then it's released on the Friday. That report showed a net dollar short for the first time since before the election last November. As I say, it has had a bit of a write-up. A few people seem to be getting excited about it. I would just caution that the CFTC report is not a great proxy for FX positioning, in all honesty, and it doesn't take a genius to look at recent price action and say the market's been short the dollar for some time anyway. But nonetheless, it has attracted a few headlines, so I thought it was worth mentioning. In IPO news, StubHub, they are going to be listing at some point this year in the United States. That was according to Bloomberg sources late on Friday. And lastly, for the emerging market focused folk out there, of course, Turkey having a bit of a moment last week. It turns out that the mayor of Istanbul and Erdogan's main political rival, he was formally arrested by the Turkish court on Sunday. This is the chap called Imamoglu, I believe it is. Apologies to any Turkish
Bless
listeners
you.
out there. Yeah, well, quite. And other bits and bobs from Turkey over the weekend. The CBRT have done an emergency rate hike to a whopping 46% to try and prop up the currency. And in a further reassuring sign, they implemented a short selling ban on the equity market at the open this morning. So, yes, Turkey seems to be devolving into a basket case rather quickly at this moment in time. And for the moment, that is all from me.
Well, thank you very much, Mr. Michael Brown. So just some headlines from me, courtesy of Zach and our overnight news roundup, which as always can be found in the pin tweet and on Substack. The kicking off macro policy. Obviously, we've covered the tariff news, obviously specifically the fact that the measures could be narrower in terms of who it's being applied to, and also the sectors. Obviously, chips, autos, and farmers have been mentioned by Michael earlier. China's proposed possible export limits now. Beijing may cap exports on certain goods to ease tensions with Washington. Premier Li told foreign CEOs China is ready for unexpected shocks and remains open to investment. Not sure those two things are quite conducive, but there you go. Japan growth concerns. Factory activity fell its fastest pace in a year. Service sector gains also tapered. Obviously, the BOJ will be keeping a close eye on that. Speaking of which, Ueda, the BOJ governor, won't immediately sell JGBs, but hasn't ruled it out. The bank will keep raising rates if inflation meets the targets. That's according to Reuters. Finance Minister Kato reaffirmed the stable yen policy. PM Ishiba's cabinet approval sliding to 35%. That's according to the Nikkei. In UK, Europe and Canada, which seems to be we're kind of lumping in Canada with Europe at the moment. I guess maybe it could be the next EU state more than the 51st state. UK Chancellor Reeves plans a tighter budget to meet fiscal rules, eyeing changes to digital taxes to avoid US retaliation.
Good.
Yeah, exactly that.
Just on that, actually, we're sorry to interrupt.
It's
While we're
April
talking
the
about
4th, right? Is it April the 4th?
No, this week, Wednesday, the 26th of March.
Oh, I got
Did
that completely wrong.
well, actually, you were probably too hungover to notice, but Rachel Reeves was interviewed on Sky News at 20 to 9 yesterday morning,
Yes.
when you were in a gutter somewhere, I imagine. If anyone has a spare 10 minutes, just go back and watch it. She is, and I know I'm not exactly her biggest fan, but it was just a complete car crash of an interview. I mean, the woman is so clearly out of her depth at this point. It's actually becoming embarrassing. I almost feel sorry for her at this stage.
No, you don't.
No, I don't.
I'm
I
just
really
adding
don't.
rant on Rachel Reeves to one of the 4 points that goes in the flyer for today's show. There you go. Love a bit of alliteration. Yes, where was I? ECB's Cipollone sees energy price declines and euro strength aiding to further rate cuts. Boo. Canada's PM Carney announced, as Michael said, an election unveiling measures to counter US tariffs and foster national growth. I think he's just desperate for a mandate if he is going to try and pull something out the bag. It'd be hilarious.
Well, he also needs to become an MP because he can't actually speak in Parliament at the moment.
Oh, brilliant.
So, yeah, you've got a Prime Minister
idea,
that can't actually do anything like PMQs or anything like that. So that's, I think, his biggest issue.
Awesome. Australia expects a budget deficit offering $1.8 billion in energy relief. And obviously, Turkey's arrest and opposition leader fueling market anxiety. That's a bit of an old headline. Don't know why that's made it in. Geopolitics now. Russia-Ukraine ceasefire target. The US aims for a deal by April 20th. Though big gaps remain. Delegations meet on today after prior Ukrainian consultations, so probably expect plenty of headlines dropping at some point today. Auto exporters are rushing shipments to the US ahead of potential supply chain disruptions from new tariffs. As always, this is something that's definitely worth bearing in mind because when they are front-loading shipments and imports and stuff, it will impact the data. By the time the data comes out, many of the usual talking heads would have forgot about this and not really attribute it to where it needs to be attributed. So bear this in mind.
Actually, on that very important note, I believe, I want to say it's either the 25th or the 26th, but it's either Tuesday or Wednesday. The Atlanta Fed will be updating their GDP Now estimate for the first time since the Fed blackout ended. So that's one to just keep a beady eye on.
Yeah, definitely. And also, as we said, that is something that most definitely is impacted from the likes of imports and stuff like that.
Yes.
Um, corporate markets, semiconductor AI. Malaysia may tighten chip export rules to slow AI development in China, as at the US is urging. Apple watches. No, I'll put my teeth in and put my eyes in. Apple watches confirm the iPhone 18's A20 chip uses TSMC's 2 nanometer technology. Meanwhile,
Good.
Tencent, Huawei, and Ant roll out new AI solutions. Micron and Nike updates. Micron sees stronger AI-related memory demand, but disappointed on margins. Nike warns of steeper sales decline, yet recent quarter results beat worst-case expectations. They're not doing it at the moment. TSMC and Petatron, sorry. PSMC will begin 2 nanometer orders on April the 1st, aiming for 50,000 wafers per month by year end. Petatron opened a US office in Santa Clara, weighing local manufacturing expansion. Global deal making, uncertainty on tariffs and stock market volatility dampened merger and acquisitions IPOs once thought poised for a surge. That's according to the FT. Investors are increasingly looking beyond the US stock market due to trade growth and valuation concerns. I think we've seen quite significant flows being attributed coming out of the US recently into European stocks. So that's just kind of backing that idea up, really. And that's it for me for now. Back to you in the studio.
Good stuff. Thank you, Ryan. Well, looking to today and the week ahead, then, to be completely honest with you, the data docket outside of the United Kingdom is actually relatively light this week, although I think market participants will have plenty to get their teeth into, of course, as all of those sources reports gear up ahead of the 2nd of April tariff deadline, and also as we approach the end of the month and the end of the quarter. So some rebalancing flows might be in the mix as well. That is actually something I know it's a bit of a cliche, but it is worth watching as the week goes on, particularly as you just alluded to, Ryan. We have seen quite a vast outperformance in terms of European and also APAC equities compared to their counterparts on Wall Street over the last kind of 6 to 8 weeks or so. So if it is a case of selling winners and buying losers, then that may provide a little bit of support to equities on Wall Street. And I think that's obviously something to keep an eye on as we move through the week. And it might also provide a bit of impetus behind the dollar as well. In terms of scheduled events, though, we kick things off today with PMI Day. In approximately 12 minutes' time, we have the latest figures due out of the Eurozone. And then at 9:30, we have flash PMI figures from the UK as well. To be completely honest with you, this data not likely to show much that we don't already know, pointing to a relatively anemic pace of expansion continuing, with that expansion largely underpinned by the services sector as the manufacturing sector continues to contract on both sides of the channel. And then that is followed up by the S&P Global Flash PMIs out of the United States this afternoon. Maybe a market mover just in terms of sensitivity over growth, but personally I think the ISM gauges are a much better barometer of the economy anyway. In terms of central bank speakers today, it is worth bearing in mind, of course, the Fed blackout period is over, so they're all likely to be in front of the microphone once again. And then we do hear from the Bank of England governor later on today at 6 o'clock this evening. Bank of England Governor Bailey is speaking about the challenges associated with economic growth. Presumably, he's going to be speaking for about 3 weeks, given the shambles that the UK economy is in. Moving on to the remainder of the week, as I said, the data docket is, to be honest, a bit uninspiring, full of kind of second-tier US data points like the consumer confidence and new home sales figures that we get tomorrow. We also get sentiment surveys out of Germany from the IFO Institute, and a 2-year note auction in the United States kicks off a relatively busy week of supply in the States. We've got a 5-year auction on Wednesday and a 7-year auction on Thursday as well.
Well, you know what else we got on Thursday?
Go on.
My favourite figure.
We do, yes. I'll get to that momentarily. Can I do Wednesday first?
Yes.
Because on Wednesday, we get the latest UK inflation data with headline CPI seen at 2.9% on an annual basis in February, marginally below the 3% that we saw in the month of Jan. No PPI data on Wednesday, of course, because the ONS are a complete and utter shower of shit. Speaking of which, we also hear from the Chancellor, Rachel Reeves, on Wednesday lunchtime. She will be delivering the spring statement, likely to see significant spending cuts delivered in the realm realm of the welfare
Okay.
bill, and also in terms of departmental spending in government as well. Moving on to Thursday, we got a policy decision from Norway. The Norges Bank expects to hold rates steady at 4.5%. They were expected to be delivering a rate cut at the March meeting, but a bit of an ugly inflation backdrop is going to prevent them from doing so. Also on Thursday, we get the latest, the final read on US GDP for the first quarter. That's expected unrevised at 2.3%. Jobless claims out of the States, where the continuing claims print pertains to the March non-farm payroll survey week. And of course, Ryan's favourite economic release, which is the Tokyo CPI data, expected at 2.8% on the year in March, down from the 2.9% prior. And then on Friday, the week wraps up with retail sales out of the UK expected to decline by 0.4% on the month in February. We also get the latest core PCE figures out of the United States. The deflator expected at 2.7% on the year, up from the 2.6% that we saw in January. And of course, it's the rules that I have to tell you that is the Fed's preferred inflation metric. And also on Friday, we have GDP figures out of Canada and final consumer sentiment figures out of the States from the University of Michigan. But as I said, all of that is kind of going to play second fiddle this week, in all honesty, to headlines on the trade and on the geopolitical front, and also those rebalancing flows in the mix as well. And for now, that's your lot from me.
Brilliant. It's just to confirm that it's not just me that if ever I mention the PCE, it's like I start getting itchy unless I do say the Fed's favourite measure of inflation.
No, it's the rules, mate. You've got to say it.
You've got to do it. You've got to do it. I mean, so something bad will happen if you don't.
Exactly. We only do it once a month, and people wouldn't realise otherwise.
Well, this is very true, mate. This is very true. Well, Mr. Mike Brown, thank you so much as always. Regular listeners and all listeners, thank you exceedingly for tuning in and giving us your time. If you are trading today, keep it tight. Whatever you're doing, stay safe, and we'll see you tomorrow.